Form 709 is the gift tax return. And here's the exam trap. Filing Form 709 does not mean you owe gift tax. Most people file just to report a gift and use the annual exclusion or lifetime exemption. Your job is to spot the triggers that require the return, then pick the right due date and extension method. Trigger number 1. You give one person more than the annual gift limit in a year. That's per recipient, not total gifts. And there's a big exception. Gifts to a U.S. citizen spouse generally don't trigger Form 709. On the EA exam, they love one person over the limit because it's simple and easy to miss. Trigger number 2. Gift splitting with a spouse. Even if each recipient is under the annual limit, the act of splitting gifts generally requires a Form 709. The return is how you make the election. This is a classic EA exam twist. No taxable gift, but still a filing requirement because an election is being made. Trigger number 3. Giving a future interest to anyone other than a U.S. citizen spouse. Future interest means the recipient can't use or enjoy the gift right now. Think, a trust where the beneficiary gets it later. This matters because the annual exclusion generally applies only to present interests, so the IRS wants it reported. Now the deadline. Form 709 is generally due April 15th of the following year, just like your Form 1040. But there's a special rule if the donor dies during the year. The Form 709 deadline may become the due date, with extensions for the estate tax return if that date is earlier than April 15th. On the exam, when you see donor died, your due date radar should go off. Extensions are tested constantly. If you extend Form 1040 using Form 4868, you're deemed to have extended Form 709 too, but only if no gift tax is due with the extension. If you're not extending the 1040, you can extend Form 709 separately using Form 8892. Translation: 4868 can carry the 709 extension, but 8892 is the standalone option. Quick scenarios. You give your niece a large check over the annual limit, Form 709, due April 15th, extension via 4868 or 8892. You and your spouse agree to split gifts. Form 709 required to make the election. You put assets into a trust where the child can't access it yet. That's a future interest, so Form 709 is likely required. The exam wants the trigger, not the math. Mateo has a loss from worthless securities. How many years does he have to amend his tax returns in order to take this loss? The options are 2 years, 7 years, 6 years, or 3 years. Think about it. The correct answer is 7 years. Claims for refund attributable to a loss from worthless securities get a special 7-year statute of limitations instead of the usual 3-year rule. 3 years is the tempting answer because it's the general refund claim deadline, but worthless securities are a specific exception. Which of the following taxpayers is required to file a return in 2023? You have Monica, married, filing separately with $1,000 of interest only. Derek, single with $12,500 of wages. Ethan, age 15, dependent with $800 of interest. And Brandon, single, age 60, with $300 of self-employment income and $9,000 of wages. Think about it. The correct answer is Monica. Married filing separately has a very low filing threshold, generally $5 of gross income, so $1,000 of interest means she must file. Derek is tempting, but $12,500 can be under the standard deduction threshold for filing, depending on the year's amounts and facts.